All right. Welcome, welcome. So nicely that all of you could take time to join tonight. And I'm very humbled. I'm so glad Neeruji is joining in. And we got other people joining in right there. There we go. Brother Walter is joining in. So lots of people will be joining. I think we had very good response for our strategic fund. And I'm really privileged to be having that you've taken time away from your family to be with me tonight. And I hope I can do you justice and kind of answer your questions and go over the presentation, the PowerPoint presented for the Strategic Income Fund. Without doing any much further ado, I would love to. Oh, I forgot to turn on my other camera, which I did. And let's share the screen and we'll go right into it. Right into. So this is right here. I just wanted to share who we are, and that's meet us. You know, my daughter is under the weather today. She was in the last presentation, but today she couldn't join. But I'm Vinney Chopra, Vinney Smile Chopra. People call me Smile. I smile a lot. Monica Chopra, our daughter, and who is a partner in the business for last 8 years now. And Ana Martinez, accounting manager. She was my vice president of accounting for 16 years. And we didn't move a dollar or cent. We didn't lose any money in 16 years, you know, in the bank accounts or anything like that. So really thank her for that. She's very, very knowledgeable. Monica has done her bachelor's and her master's in MBA, and myself, I'm an engineer, mechanical engineer, and turned into motivational speaker, and then into real estate, then syndicator, then fund manager, all that. And I've written 3 books also in Amazon top sellers. But that's a little bit about me. My company, our company is Monil. That's Monica and Neil put together, Monil brand of companies in all over, you know, like there. Our other partners, just keep it here. So let's go here to the, oh, wow. Maybe I should do the slideshow. Sorry about that. So I should do the slideshow from here. There we go. That's a little bigger. And then do the next one. My partners are Sapan Talati and Pooja Talati. They are brothers, sisters, married. They have children. Pooja lives in Austin, Texas. And then Sapan lives in Orange County in California. I live near San Francisco in Danville, Blackhawk area, right here. We've been living here, by the way, 44 years. We've been married, my wife and I, 44 years. Happy, very, very beautiful 44 years. And our Neil and Monica, Neil went to school at Berkeley. He did electrical engineering, computer science. And then Monica, our daughter, went to UCLA and did MBA, and she's partner with us. And of course, my wife is also, as I started the business 16 years back, she's been an icon in the business. And now we don't put her picture. She's taken retirement kind of thing and really enjoys her time away. Then Denver Lobo and Deepa Akula. So we are the management team who are putting this, together. Our project together is the word. I don't know why I cannot go backward. Here we go. Okay, now we're going to go straight. Many of you have already seen the PowerPoint presentation that I sent to all of you, but I'll be taking time to go over the salient points, and then we'll open up for question answers also. So that's the beauty of it. It's a strategic income fund, Monil Investment Group investor presentation. Again, it's a 506C offering with the Regulation D. I teach also what I preach, teach, and I've been doing it. Our company has about 1.1 billion under AUM now. And with my limited partnerships and general partnerships, it's $1.6 billion. We have invested a lot of money in other syndicators also as LPs, into my cloud defense startup, into my other businesses, metaverse. And then we have the AR, VR companies, lots of different businesses. So again, the exciting part is it's a confidential investment summary. Please do go through it. And hopefully you did go it, but I'll go also. Why Monil? Fund overview.
Vinney, before we get started, my friend, is it
please, brother?
Is it possible to mute the?
Oh, I would love to mute all. Thank you. I
Awesome.
actually told myself to do it and I forgot. Walter, thank you, brother. Thank you so much. Yeah, no, this will be much better that way. And then fund overview, investment strategies and summary of terms and asset management and all. Again, Monil advantage is that we have joint partnership with JT Capital that we have been working together for 5 years. We bought $52 million multifamily, sold for 64. We bought another deal for 35 million. Princeton Park, we are selling it now for 41, 42 million. Well, 42 million or so. It was worth about 48 million. But guess what? With the interest rates hikes and everything, prices have come down and so on. But then institutional grade assets is what we are looking for this fund. We'll be working as if we are a family office, and high institutional grade multifamily properties will only be considered for us to invest money 1 million, 2 million, 3 million, 4 million, 5 million. And I'll explain that how we'll do it. The sponsors need to have minimum of $500 million portfolio AUM for us to even look at them. And we have so many deals on our table right now, Sapan's and my tables, that people want to give us 20% returns to give them money like $2 million for only 9 months, just 9 months, because they are going through a refinancing. They need that $2 million to just do the rate cap lock, it's called, and then they will give us 20% return on that money. And then we can turn around and invest that money with a lot of other people. There is lots of bad things that are happening in the sense that I think over $200 billion of loans are coming due for multifamily and other assets, and mostly multifamily, and lots of good operators bought right, but the interest rates went up. So it's a very limited opportunity for this year, 2024 and 25, for people like us to be able to put some good cash flow positions with highly built, very nicely built and cash flowing properties. I want to highlight the word cash flow. We are not going into, if somebody's getting into foreclosure or things like that, we are not going to even touch them. They cannot. And they have to be predominantly newer assets, like, 2018, 17, 15, 2000, 2001, very, very new predominantly A plus assets in Florida, in Texas, and Georgia, and maybe in some other states. If you find some really, really good deals, we might be able to get them also going with us. So institutional grade assets only, high quality. Active asset management. We've been managing our portfolios, our partner and us. We have about 2 billion, over 2.5 billion assets under AUM that we've been managing for last 16 years, actually. I think JT Capital has been in business 13 years. We've been in business 16 years with my 2 companies. So that's why we know how to asset manage multifamily. Strategic risk management, we definitely want to reduce the risk and only put money in the safe places. So that's a big one. I wanted to mention that again. Let's go over here to strategic income fund. I'd love to go over this slide a little bit more in detail, if I may. Target properties it's a $75 million fund. We are only raising about 30 million right now. Then we'll stop and then we'll raise more. We want to deploy. We have so many deals right now on the table. As soon as the money is given to us in the fund, bank account, we'll be able to deploy that money. So that really is nice, because then your money will start making money right away. You won't have to wait for a month, 2, 3, 4 months, but we pay quarterly. I want to say that. So first quarter that anybody will get paid would be like in July, even though you will start accruing your pref rate from when the money comes into the bank and so on. So it's a pretty good way that we could be getting cash flow from the assets we invest into. They'll give us the interest. So it's from that cash flow we'll be paying our investors. That's the key thing. Let's go over here to, it's 3 to 5 years, in the sense that we just cannot give the money. Most of this money will be needed by us, by these operators for about 2 to 3 years. 2 to 3 years, some even like 9 months, I just told you, or 10 months. There are some deals they need us for about year and a half or 2 years. As soon as they're able to refi or sale or something, or as another thing I want to talk about, as the interest rates come down, which Fed is saying that 3 times they might cut the rates, and now they're saying in June, not April, not March, in June. Who knows? It's election year also, but the economy will be getting better, of course, and that's where it will be even better for us. That's the beauty of it, because as the interest rates come down, then the cash flowing properties, already cash flowing, really predominantly very nice assets, will be making even more cash flow to pay us back quicker. And we love that. That will be fantastic. We'll be also putting about 30 to 40% of our money will be going into equity positions also. What does that mean? Not only the borrowers will be giving us the cash flow of 16, 18%, per year, plus also give us 5 or 10 or 15% GP side of their assets. So we'll be cashing in not only on the cash flow, but also get the equity gains from their, the assets as they grow in value. So that's where we will be giving the depreciation from those assets will be coming to the fund, and we'll be giving it to our investors, just like I've been doing it for 16 years. So K1s that you will get will have the distributions in there, and also the effect of depreciation, which will be done by the end of the year, of course. 3 to 5 years, distribution quarterly, target assets, core plus 100 units, multifamily asset predominantly in Texas. Like I said, if you find something really, really very good in great locations, and we know where to find them. We got a whole, I'll show you the whole slide where we are getting all these great deals and everything. Strategy right there, minimum. Oh my gosh, this is wrong. It should be 100,000 over here, because we changed it last present. Oh, this is the wrong PowerPoint. Oh my gosh, my secretary gave me the wrong one. But anyway, the only difference is that this is 100,000 minimum now. This is also, 100,000 and so on. Anyway, but most of my investors have given me 100. Last 16 years, I've never taken, well, very few 50,000. In last 16 years, our investors have invested with us 100, 200, 500 million, like that. And our top investors have given with us 5 million. We have several investors in the $4 to $5 million that they've invested in our deals. So that's very, very good. And our track record speaks for itself. So Class A. Okay, let me go ahead. Thank you everybody for joining. I really appreciate that. Lots of you have joined. So what we would like to talk about is, we'll be investing in cash flow and the upside. Class A members will get 12% pref returns, and they get paid before Class B. Number one, Class A members are 12% preferred return, minimum of 100,000, equity multiple 1.6 in 5 years, because if you do 12% for 5 years, that's 60% you'll be making, which is pretty good money. I mean, if I work so hard in the stock market and everything, average is about 8%, 8.9. Of course, last year was a good year for stock market. Year before was a bad year. Anyway, we don't know what's going to happen this year. Market is up and down. But Class B investors will be 10% preferred return. Not bad. 10% plus equity upside. So in other words, the depreciation effect will come to Class B, and also the upside of the equity gains will be shared 70-30 with our Class B investors. I just wanted to mention that. Now, Class B waterfall based on investment amount, I'm just reading it here, preferred return of 10, but as you invest more money, then the splits change, and we are giving better splits after 13% IRR. Now, IRR is an internal rate of return. Many of you are very, very savvy investors. So usually IRR is the time value of money because we are paying you quarterly back, and then your investment will be paid back in 3 to 5 years, the IRR of 13% may mean like 15% per year returns, or 15.5 or 16. We don't know, but it's going to be more than that per year. That's how I just wanted to explain a little bit about that. Then let's the strategic income fund. Why now? I hope you have read it already. Strong fundamentals. Expense shocks are the ones where we have on our deals where they need some help. They could do cash calls. Of course, good assets can do cash call, but sometimes it takes longer time and so forth. But if you have the money and we can bring it to them, they're willing to give us 16, 18, 20% cash flow to save the day, and these are cash flowing assets. Reduced competition. I do want to say that family offices, hedge funds have been doing what we are doing for a long, long time, but they don't like to write checks less than $10 million or $5 million. So that's where we are coming in to pay to our investors, our syndicators or fund managers, like, $1 to $4, $1 to $5 million checks. So we are taking the lower end where there is less competition right there. And then our income fund benefits will be current income, the equity upside, and the defensive portfolio. Those are the main things. And there are a lot of good things you could read up by yourself. We'll be providing you that also, the whole thing. So where do we stack up? We stack where the senior secured debt is there on $40 million deal, multifamily, or 50 million or 70 million, because these are predominantly A-class assets who are cash flowing and they are making ton of money. They just need a little bit injection of capital. So we'll be coming, strategic income fund will come right behind the senior secured debt right there. And then comes their equity. So their investors' equity will be below us. We will get paid first from the cash flow as they pay the mortgage and everything. Then we'll get paid, and then their equity investors will get cash flow. That's how. And we'll be doing joint ventures, all legal, and we'll have special provisions in those things. We have already looked at those documents. Our attorneys are top-notch attorneys. And who will be administering our fund? You might like to ask me that. And let's just go over this one, 3 to 7 million check. Target right there, blah, 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 all theirs. Positions, priority position through preferred equity and sub debt, sponsorship, well-established operators, typically over 500 million in AUM. Collateral will be asset-backed, cross collateralization, strong control rights will be spelled out in our joint venture agreements, and low leverage. Haha. See, the thing is, Freddie, Fannie, lots of other big institutions really are not even talking to operators if their debt coverage ratio, LTV, loan to value, is in the 60 to 65%. That's what we'll be looking at. We are not going to be putting money from our fund into 80% LTVs. Those are very risky, because what that means is their loan, senior loan, is 80%, only their equity is only 20%. So we'll be looking at all those things to determine if we want to even take steps to go forward with those operators. They have to have low LTV of 60, 65% is what we are, going after, short to midterm maturity. Let's go over here. So this is rigorous investment screening. We do so much screening. Last year, in 2023, we did not buy anything. Monil bought 0. In 2022, Monil bought 1. Year before, Vinney bought 0. Before that, 2. So we've been only selling our portfolio at the peak, but not bought much. But this is the position right now where we could invest few millions of dollars, but we can control 30 million, 40 million, 50 million, 70 million assets by giving them the lifeline. And then we are not on the loan. Myself or Sapan, we've been on loans like crazy. 40 million loans, 70 million loans. I mean, at one time I had $227 million loan I had written, under my signature. I mean, it's just mind boggling. But, God is good and we have sold so many assets, everything. So this is the way to really do. We are the family office now, a hedge fund kind of similar to that kind of thing. So private equity sponsors are giving us leads. Institutional lenders are giving us leads. The big lenders, they know who are these great operators and who need some help. So we are getting these leads from them. Proprietary networks that we have established in 16 years, they're giving us the leads, and existing borrowers are giving us the leads. So we evaluate like 1,000 opportunities in a year minimum. And then we undergo due diligence with only 10%, and we buy less than 3% usually. That's our track record. And that's the thing which really helps to screen and make sure the focus on the risk management is there, due diligence, the stress testing, the financing, the active monitoring, and the exit strategies are very, very big in our company. We want to make sure that your money is protected. Our money and your money is protected. That's the key right there. So then I would like to, let's go to the next one. Then I want to show you who will be administering our fund, which I'll say that just after this one. A strategic income fund maximizes sale, refinance. Those are the two major things we are looking for in the asset. When will they be selling? How long they have, on their exit plan, and the refi, because refi will give us the money back quicker and also give the equity gains quicker. As the refi happens, the equity comes into cash, and then I'm sure the operators of these investments would love to pay us back our equity so that they could keep their property back on track and everything, because our money is expensive money for them. Actually, as a matter of fact, I talked to one guy, I don't want to say the name, he charges 70%. What? 70% for his money. He says, Vinney, if some people are in a bind, they are willing to pay me 70. We're not going to charge that. Ours is like 16, 18, and 20% stake in the cash flow, and then equity positions in about 40% or so, like that. But let's go over here to, again, Class A. I hope I did a good job before. I don't know why it's redundant, but my team put it there, which is okay. Let's say 100, 100, just like that. So let me see. These were some of the questions we were asked in the last webinar. Is there depreciation in K1? Yes. Class B will get the depreciation. Class A investors, because no equity is involved, will not receive depreciation effect. How do investors receive their cash flow? We vet all the deals and their performance for cash flow quality. We will only invest in Class A, predominantly in that, and multifamily properties with experienced operators and all that. I just covered that. How does Class B investors get 70-30 split? We will be investing 30 to 40% into the deals that will give us a position in the cash flow and equity percentage. That's the beauty of it. And hence we'll be able to get the capital gain upside, which will be split with Class B. Please come in my shoes. This is by far the best of the best. We've been planning on this for 7 months, by the way. And we are launching it next week. The PPM is ready, everything, the website, all that. It's a 506C, so we can advertise. Anybody can talk to us, and we can do promotions and things like that, right? And is this a short window of opportunity? Yes, it is. The window is closing on it very quickly, because the sooner the economy improves, I shouldn't say like this, interest rates going down, but if economy improves, then this window shuts down, because the people who need the money right now will not be needing the money in 2 years, 3 years. So this window is only a couple of years, maximum. And then again, there is a summary of terms I would love to answer. And asset management team, you already saw us. right? There are appendixes there. There's some case studies there. It's very difficult to go over each one, but please do find time to read it so that you could see where we are coming from and so on. And then this is another one case study, important, and this, and you can reach me and everything. But let me take you to who will be managing our asset. Our asset will be managed by this company. We have already signed the deal with them. It's called NAV Consulting Company. They are global. They are headquartered in USA. They are recognized global leader in fund administration, ranked #1 fund administration, emerging manager friendly, and then of course, exceptionally competitive pricing, award-winning service and technology. 1991, they have been doing business. So long time, 30 years, 260 billion under their administration, 260 billion. So they know what they are talking about. And then 99% client retention, and then 2,500 employees they have right now, they'll be working with us. So we are very, very excited about it. 2,200 clients plus they have. So that will be our fund administration, our CPA, our SECs, attorneys are the top notch, and we'll be getting a third party outside auditor to look over the whole, all the books, all the P&Ls and everything. So it's going to be a very exciting time, very exciting time. So I would like to open the floor so that I can answer mute all. Oh, okay, maybe it was unmute all. There we go. I can unmute. So please ask me questions. I'm here to answer every single question for you.
Hi, Vinny. I have a quick question. Actually, it's
Plus,
two
brother.
questions.
Yes.
First is, what is the minimum investment? And then the second one is, how long is the money? I know you can't guarantee anything, but how long is the
Yes.
money expected to be in the fund? How soon could we potentially be getting our returns back?
Good point. Good point. Very good. Thank you, Walter. I would say that, in very special cases, we might think about 50,000. But no, minimum is 100. To start with, it's 100. And you can add to it also in the fund, because NAV is so beautiful company. They will take care of everything for us. All the communication, and of course, it has to go through us. They will be doing the portal, everything. They will be doing all the different, calculations. They are very well built administrative. So 100,000, I would say, will be the minimum. And again, class A, class B, you could invest in both of them. How long will be the fund? It's minimum 3 to 5 years. So please, don't think that you will get the money back in just like 1 year. It won't happen. So I want to be very straightforward. I know in my other deals, usually it's like 5 to 7 years our attorneys write, right? I don't know what the attorneys decided on this one, but our thinking is that we should be able to keep it for 3 to 5 years.
Hey, Vinny, how you doing? It's Brian.
Hi, Brian, brother. How are you?
Good, man. Hey, when will you have the PPMs ready to review?
Okay, PPM is almost ready. It's
Okay.
almost, we have done 5 revisions. We want to make sure it's the best and everything. And we have hired the top-notch SEC attorneys from Dallas area, I think they are. And they have put together, they've had several meetings with me and Supper and our teams. And it's ready. It's ready. It will be DocuSign, very simply sent to our investors who tell us if it will be their Roth IRA or 401k, because retirement funds are amazing. I think about 40% of my investors invest in their retirement funds with Monil. I don't know about Sapan, JT Capital, but you could actually self-direct IRAs, 401ks, QO plans, Roth IRAs or other ones. Self-directed, it's called. Many of you already know. That way you could invest through there, or cash, of course, is good. You could invest through LLC or trust funds, your revocable trust funds. You could do, all kind of things, right?
Got it. So are you going to send this PowerPoint out then as a teaser then, or a soft commit until the PPM's ready?
Yes, definitely. We
Okay.
have, I would love to, if you will Oh, wow. I think, Brian, brother, I think I will love to send you that so that you could soft commit it. A lot of people have already soft committed. We'll be stopping right at about 15 million in this one. And we'll
Okay.
sell out fast. I know that because we do so. And I'm returning money. I just returned $9 million. I'm returning another 7 million. I'm selling another property in Knoxville. I just found out today only this morning, that the buyer needs a little bit longer to assume our loan for my Knoxville property. We bought it for 12 million 5. We're selling for 17 million 3. So they are assuming our loan at 5.61% or something, Freddie loan. So they said, Vinny, we need some more extension. So I signed paper today to extend it. So I'll be returning money, I think in March on that, well, February or March on that one also. Yeah. Please, more questions.
I have one question, Vinay,
Please.
and that is, you said that the payment will be from day one itself. Suppose
Yes, that's right.
Yeah,
Exactly.
I'm
As your
250.
money is wired into the account, you will start accruing, we call it, and then we'll pay out, like most probably we are thinking July, at like the June 30th will be like second quarter ending. So anybody that will turn in money like in February, let's say, right? So we'll start accruing your pref rate from the day we receive the money. That's true. Exactly. And then all that will be paid out like in July,
let's say 1st of July, you will be paying the payout for 4 months, February, March, April, May, June,
Yes.
month at a time.
Definitely. So
Okay.
it will be the second quarter plus extra days for, for the first quarter, whatever is there, right? Yep.
And
Mhm.
similarly, at the time of sale of the property, when you're closing it, when you're finally giving it back, will it be counted right up to the day of the sale or later on?
Okay, very good point. Now, see, we'll be investing our fund into about 17 to 20 or 18 to 22 deals. Total fund is 75 million. So
Right.
we'll be able to control with that 18 or 20 assets. Think with me. If they each one is about 40 million, we'll be controlling $1 billion, literally, coming after the debt. The senior debt will be controlling through JV partnership with about 17, 18, 20 assets. So we don't know, as the investors, the cash flow comes back and the equity gains come back, we'll start returning the money. Yes, sir. Mhm.
If it's not that all that money will be returned at one time.
No, it will not be. It
Okay.
cannot be, because see, we'll be deploying money with different operators and
Right.
each one will be separate, right? So
Right.
we tend to say that, okay, after about 3 to 5 years, we would have returned all your money definitely, and still keep the equity positions for those investors who are still with us, will be
Yeah.
able to keep it. Yeah.
Thanks.
Yes, thank you. Love to answer some more questions if you have. Mhm. Please, Greg, please go ahead. Thank you.
Hey, Vinny. Thanks for
Hi,
the
how are you, brother?
good. How are you?
Oh, doing good. Thank you.
Good. I just had two questions. First
Please.
one was, do you do calls with the investors monthly, weekly at all?
No, see, I
okay.
used to do it. I started in this business 16 years back. Clockwork. I used to have so many investors join me for my quarterly investor meetings. I would record them, then I'll send them to everybody and who missed it also. Then over the years, like 7, 8, 10 years, I did it, right? Last 5, 6 years, only one person shows up or two people show up. So that's why I don't do weekly, quarterly, video calls, but we are able to send quarterly updates. But our investors can reach me anytime. See, that's the beauty of Vinney Chopra and Monica Chopra and our whole boutique, business, is that you can text me. You don't even have to go on my Calendly at all. You just text me, this is what you would like to talk about. I will follow up and call back, or Monica will,
Awesome.
Yes.
Thank you.
Yes. Thank you. Thank you. But, the beauty is that, we love it. I'll be 72 this year, guys, 72. And I'm so fired up to really, life has given me in abundance. And I really appreciate that. I know senior living also is very big on my mind. I'm a senior, so I want to build even more nicer communities. I know I got a little bit sidetracked with the loans and all, construction costs going higher. Some of you might be, who are in my, database, and everybody listening to me, is that we are doing everything. Punta Gorda, we built it, we leased it, and we sold it. We gave 42% returns to our investors, and I made zero money. And that's who I am. And my partner, we did not make any money because we promised our investors, in returns. And we will do the same thing for Williamsburg. We'll do the same thing because we did not know how COVID will affect our construction business and all that. So cost of goods went up 30%. And then our, delays and just a lot of, challenges in development. That's why I backed away from, building. I'm going to go to Arizona now, where the seniors Mecca is there, and we'll be buying some buildings already built and renovating them, and then opening senior assisted living and memory cares, which is very big on my mind, and hospitality. But my main thrust of business is multifamily, which is what we are in here today. All right. If there are any more questions, love to answer. I want to thank everybody for really doing your best to join tonight. I want to thank you, and God bless you all. And please soft commit right away, and let us know how much you would like for us to hold your spot for it. Of course, it's first come, first served, and only when the money is wired. So even the money wiring, it goes by that time. We have returned sometimes $3 million back to investors because we had stopped collecting more money than that. But then it's a $75 million fund. We'll make sure that you get into the next, 10 or 12 million when we raise. But the first one will be only about 10 million, 10 to 12 million I'm raising, and 10 to 12 million Sapan is raising, his team. So it's a very small fund for me. And sometimes I've raised 10 million in one day. Oh my gosh, thank goodness.
Where is the, Vinney, where's the
our
link to
investors
the?
are so kind, so wonderful. Thank you so much. And please, I will send you all a link for soft commitment. Yeah, sure. Thank you. God bless you. Take care. Bye-bye. Okay, let me close right there.